Hey everyone, welcome back to Corporate Decoder. Today, VSEE just filed a Form 8K about their annual stockholders meeting, and I am seeing a few key decisions that could shape their future. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company approved a reverse stock split, and I've got the details on what that means for shareholders. Alright, so what we have here is a current report, essentially an update on important events happening with VSEE HEALTH Incorporated. The big news dropped on the 25th of August 2026, which was their annual meeting of stockholders. This is where shareholders get to vote on important company matters. Now, VSEE HEALTH Incorporated, as we know, is a player in the health tech space. They've got common stock trading under the ticker VSE and warrants under VSU. The company is based in Florida and they are classified as an emerging growth company, meaning they get to use some extended deadlines for new accounting rules, which they have elected to do. Let's dive into what the shareholders actually voted on. First up, the directors' proposal. Kevin Loudermilk and Colin O'Sullivan were elected to the board of directors. Looking at the votes, Kevin Loudermilk received 183,00518 votes for, and Colin O'Sullivan got 183,24565 votes for. This shows pretty strong support for these two individuals to guide the company for the next few years. Next, the auditor proposal. Shareholders ratified the appointment of WWC PC as their independent registered public accounting firm. The vote here was overwhelmingly in favour, with 27,539,011 votes for. This means the company's books are going to be audited by this firm for the fiscal year ending the 31st of December 2026, which is standard procedure and builds confidence in their financial reporting. Now, this is where things get interesting. Proposal number 3 was the reverse stock split proposal. Shareholders approved giving the board the authority to enact one or more reverse stock splits. This means they can combine existing shares into fewer shares. The ratio can be anywhere from 1 share for every 20 up to 1 share for every 80. This is often done to increase the stock price, making it more attractive to certain investors and potentially avoiding delisting from exchanges. The vote for this was 26,433,405 in favour. This signals a clear intent from management and a majority of shareholders to try and boost the stock's valuation. Historically, companies that do reverse splits, especially at higher ratios like 1 for 80, often face increased scrutiny. For example, Kodak in 2021 did a 1 for 20 reverse split, and while it temporarily boosted the price, holders saw about a 40% additional drawdown over the following 90 days. A $1,000 position there became around $600. So, while it can help with exchange requirements, it doesn't always solve underlying business issues. Finally, there was the adjournment proposal. This basically gives the board permission to postpone the meeting if needed to get more votes or discuss things further. It passed with 24,507,566 votes, for this is a pretty common proposal to ensure that all necessary business can be conducted. Before we dig into what these votes mean long term, let's talk about how you can stay updated on all these filings. If you want to see a live breakdown of a company's risk index, red flag scans pulled directly from filings, and an overall screening verdict, you can check out decoded.report. The direct link is in the description and the pinned comment below. It's how I keep track of these companies, even after the videos go up. So with that out of the way, back to the filing. So, what is the takeaway from all of this? The election of directors and ratification of the auditor are routine governance steps. However, the approval of the reverse stock split is a significant move. VSEE HEALTH Incorporated is clearly looking for ways to improve its stock price and market perception. This often happens when a stock has fallen to very low levels, and we can see from the current price of 2 cents that this is the case for VSE. The company has 209 employees and their stock is trading on the OTC market. With a price of just 2 cents, they are likely trying to avoid getting delisted or appear more substantial to institutional investors. It is crucial to remember that it doesn't magically fix the underlying business. If the company isn't generating profits or growing its revenue, the stock price could continue to decline even after the split. For instance, companies like Sears saw multiple reverse splits before ultimately filing for bankruptcy. We also see their warrants VC, which entitle the holder to purchase 1 share of common stock at $11.5. Given the current stock price, these warrants are significantly out of the money, meaning they are unlikely to be exercised by holders, unless the stock price makes a massive comeback. Looking at the broader picture, VSEE HEALTH Incorporated seems to be focused on improving its market standing through financial engineering rather than immediate operational growth, at least based on this filing. The success of the reverse stock split will depend entirely on whether the company can demonstrate improved performance and generate value for its shareholders going forward. The risk I am watching is whether this reverse split is just a cosmetic fix or if it is part of a larger strategy to turn the business around. What I am actually looking for is sustained revenue growth and a clear path to profitability. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Check out the Discord in the description.